This is a Forex Preview. Thank you for joining us at XM.com. We'll be looking at the Bank of England policy meeting coming up on Thursday and the outlook for the pound. I'm Cristina Marujos. With me today is our investment analyst, Cristina Barcenido. Cristina, the Bank of England will step into the spotlight tomorrow, a meeting coming just a day after the FOMC policy announcement, and in a relatively busy day with several central bank meetings in Europe. So how important will the last Bank of England meeting of the year be?
Hi, Christina. That's right. The Bank of England will announce its rate decision during the post-FOMC trading session tomorrow, along with the ECB and the Swiss National Bank. It's the last meeting of the year, as you said, so definitely it will attract attention, even though new projections and a press conference are not in the schedule this month. Nevertheless, investors could still go through the rate statement and look for new signals about how monetary policy will evolve in 2023, or at least at the start of the new year. The central bank was very clear that monetary tightening will continue, so there's no doubt that another rate hike will be delivered tomorrow. So the question that jumps in mind is how big that increase will be. Inflation has slowed down for the first time, easing to 10.7% from 11.1% previously, and we have seen cooling inflation pressures in other major economies like the US and the Eurozone. So that makes us think that monetary tightening has started to affect the UK economy as well. House prices faced a sharp decline recently as well, but obviously the central bank would like to see more inflation softening in the coming months. Inflation is still growing at double digits, and perhaps wage growth may further pick up steam, likely boosting further inflation pressures as strikes are organized almost every single day this month to push for higher wages. The cost of living is weighing on people's finances, so obviously more wage increases could come. Moreover, energy subsidies will continue during the first quarter of the year. Therefore, inflation in the UK may stay elevated for longer. So I think the central bank will not rule out additional tightening next year. On the other hand, financial conditions in the UK are still fragile, and continuous monetary tightening could raise the risks for a painful recession. The latest GDP data showed a slight contraction in the 3-month average to October. So all that uncertainty may create more divisions within the central banks. Perhaps we may see a 3- or a 4-way split within the rate setting committee, but the majority will probably vote for a 50 basis point rate hike from a 75 basis point rate increase last month. And perhaps it may remain committed in its price stability target, but at the same time, keep in mind the negative economic consequences from monetary tightening that may arrive with some delay, probably next year.
And now turning to the FX market, the British pound is in relatively good shape, having gained significant ground against the US dollar since September's slump, of course, to record lows. So could we see another rally this week?
Indeed, the British pound has already secured 2 bullish months against the US dollar, and it's heading for another one, trading 20% higher from September's record lows. If we look at the weekly chart, it's currently trading around the 50 weekly moving average, which has been a key resistance territory more or less a year ago. So it will be interesting to see if the Bank of England could be the trigger for another rally above that line. If for that to happen, the Fed will need to appear less hawkish than the Bank of England. So, for example, if the Bank of England signals a potential resumption of aggressive rate hikes, if, of course, economic conditions allow for that to happen, and the Fed clarifies that terminal rate will come earlier than expected, then that could help the British pound to extend its recovery towards May's highs. Markets are currently pricing more than 1% of monetary tightening in the UK. On the other hand, they price less than 1% monetary tightening in the US. So that divergence in future monetary policy may provide more room for volatility in the pound.
Cristina, thanks so much. This was a Forex Preview here at XM.com.